If you don't find a way to make money while you sleep, you're going to work until you die. Well, I think that's a good summary of why passive income is playing such a prominent role today in people's lives. And on today's ETF Battles, we're going to feature 3 ETFs focused on passive income. 2 are from Global X, the others from JPMorgan. Who wins today's passive income ETF battle? Find out right after this. Welcome to ETF Battles. I'm Ron DeLegge. We're in season 3. And if you're new to the show or our channel, just hit the subscribe button to join the party. And if you've been enjoying our content, you can also hit that like button. Keep your ETF battle suggestions coming. Give us your ticker symbols in the comment section below or on our Twitter feed at ETF Guide. Also, if you see an ETF battle suggestion by another viewer that you agree with, hit the like button on that battle, and that will tell us which ETF matchups we need to prioritize. Heads up, I'm going to be hosting an upcoming webinar on retirement planning. I'll be talking all about the important things like how distributions from IRAs and 401k plans impact your Social Security income. Also, the best timing for Roth IRA conversions and strategies for eliminating or reducing taxes during retirement. Do not miss it. If you're already retired or near retirement, I highly recommend you join us. Visit the description section below in this video to register. Today's matchup was requested by Gabrielle Chaparro. Congratulations, Gabrielle. You win your choice of an ETF Battles shirt or a coffee mug. Hit the description section below to claim your prize. That's what happens when we pick your ETF Battle suggestions. Anyway, today's contest is focused on passive income ETFs from JPMorgan and Global X. Now, these funds use alternative income strategies like selling covered call options to generate cash flow. Judging today's passive income showdown is Tom Psarofagis with Bloomberg and David Dierking with TheStreet.com. Judges, welcome back to the show.
I'm so glad to be back.
Thanks for having us, Ron.
So our 4 battle categories are cost, exposure, strategy. We got performance and yield combined. And then we got our mystery category, where you can pick that single factor or multiple factors that you feel are material to today's showdown. We're going to go through these 4 battle categories one at a time. Our judges are going to pick the ETF that they choose as a winner in each respective category. They can also opt for split decision. They could protest. They can nominate a wildcard ETF. It's completely up to them. None of the battle outcomes, by the way, are ever predetermined or known in advance by myself or any of the judges. So let's kick things off with cost. That's the first category. David, please get us started.
Yeah, JEPI is the clear winner here, and it's really not even close. It charges 35 basis points. The 2 Global X funds, XYLG and QYLG, both charge 60 basis points, so significant cost difference there. On top of that, spreads are relatively narrow with JEPI. It's got about $8 billion in assets, so a lot of shares traded every day. The other 2, the Global X funds, have under $100 million in assets, so trading costs are much higher with that. JEPI is an actively managed fund too, so to get a fund like that for just 35 basis points, I think is a clear win for investors. So JEPI gets the nod.
That's a strong start. Thank you, David. Tom, how do you see it in terms of cost?
Yeah, I'd let go a lot of the same points. I like Global X. They have a lot of very interesting strategies. Cost isn't really their focus. They're not really known as the low-cost provider. They like to provide unique things, and sometimes unique things cost a little bit more, and they're 60 basis points. JPMorgan has been really aggressive with their ETF business, especially with a lot of anything short-term cash or this new one that they have out, JEPI or newish. So 35 basis points, that's almost half the price. So there's really no big debate there. And I was going to mention the spread stuff, but I think David just covered that very nicely.
Thank you, Tom. Unique things cost more. You mean like NFTs of Bored Apes? Yeah, those are some unique things, I'd say.
I don't know how much those are going to cost.
Yeah, they're pretty unique, though.
Oh, for sure.
All right, let's take a look at exposure strategy. Tom, you're still up.
let's put the global X ones together, the S&P and the NASDAQ 100. So they're essentially the same strategy, just the different index, right? So they're just sort of writing calls on half of the portfolio. And I like this approach. So it's like you're still participating in some growth, but you're getting some income generated from the half the portfolio of the call writing. The difference here is why I sort of like the NASDAQ one is a lot of people will go to the NASDAQ for the growth participation, right? It's more of more high growth names. You don't really go there for the income. So it's nice to now have sort of income generated on the NASDAQ 100. One thing that David mentioned a lot and why the winners, I'm going to tell you the winner now, it's going to be JEPI because you're getting a lot for 35 basis points. It's actively managed. They're focusing on value stocks, also low vol, and there's an ESG screen in there. That is a lot for 35 basis points. And I sort of, I get it, the Global X one sort of a systemized strategy. You can just keep writing the cost, but I like that there's an active overlay to this, especially what you've seen in some of the recent market volatility. I like that you're being able to have some sort of active approach. And again, for 35 basis points, I think you are getting a lot jam-packed in that ETF. So JEPI is my pick.
Thank you, Tom. David, you're up next for exposure strategy. Do you agree with Tom's analysis?
Yeah, absolutely. He hit all the right points on this. JEPI, it's interesting to look at this one compared to the other ones because it's really pretty unique. It targets about 100 stocks from the S&P 500, like Tom said, with the value characteristics. So having an active manager in this sense, I think makes some sense, especially with the cost advantage. If you can get an active manager for less than the cost of some index funds in some cases, I think you really have to take advantage of that. The covered call strategy on this one's a little unique in that it's using equity linked notes to get its exposure instead of just doing the traditional buy the stock, write the call strategy that the Global X Fund does. So it's a little unique in that sense, but JEPI is more diversified. It is a little less tech heavy than the Global X Fund. So I agree 100% JEPI is the winner.
That takes us next to performance and yield. And David, you're still up. Please give us your analysis.
Yeah, there's not a lot of history to work with these funds. They all three of them launched in 2020. So we've only got about a year and a half to work with. All of them have returned somewhere in the 30 to 40% range since their inception, so not a big difference there. The real differentiators on yield, XYLG, QYLG, they're both at about 6% right now. JEPI is all the way up at 11%. So if you're looking for a high yield option, that's your clear choice. It's also worth mentioning here that the two Global X funds, they actually cap their distributions at 0.5% every month. So if they hit their cap every month for 12 months, the 6% yield is about as high as you're going to get on this. JEPI obviously has the flexibility to pay out all of its income that it receives. So again, JEPI has the advantage here. I'll go with that one.
Thank you, David. Tom, you're up next on performance and yield. How do you see it?
Sure. So like you mentioned, they're not all, there's not a whole lot of track record there, but JEPI sort of splits the middle, and the S&P one, Global S&P, is doing a little bit better, and that's just because of the environment that we've been in. Tech has been getting hit a little bit more, high growth names have been getting hit a little bit more. So actually, the NASDAQ 100 one has been lagging. But I also look at the difference between each and its index. So let's say the covered S&P one is lagging by 5%. The covered NASDAQ one is lagging by 8%. So I really like it between the two Global X ones. I like the S&P one better just given the environment. But performance-wise, JEPI sort of splits it in the middle. So I like that one, and also on the yield play as well. With the capping, that can also, you said that there's only so much you're going to get out of it. There's a little bit more flexibility with JEPI, and so I also like that they use the notes. Granted that there's some counterparty risk there, but I think that's pretty not a huge burden, but just something to bring up. But I think in terms of performance, even just sort of forward looking, I think JEPI is my choice here.
Our judges thus far have agreed on everything up until this moment. But we still have the mystery battle category, so there's plenty of time to disagree and argue. So that takes us next to the mystery category, where our judges can choose a factor or multiple factors to give us their analysis and surprise us. So Tom, you're up. What is your mystery battle category and who wins it?
Sure. Well, hopefully this one's a little bit spicier. We can disagree here on something, but I'll look at capital gain distributions because I think those are really important too. And granted, these are using option strategies, and sometimes those could be difficult to in-kind out and sort of tax manage. So if you look at both the global X ones, they paid out a capital gain distribution last year, and JEPI didn't. So not only do you have the yield advantage in JEPI, you don't have any capital gains distributions as well. So that one I'm gonna give. So my mysteries, capital gain distributions, and tax impact, and that one the advantage is gonna go to JEPI.
Thank you very much, Tom. That was a great point. We appreciate that. David, you're up next. What is your mystery battle category and who wins it?
Yeah, I wanted to cover something that Tom just alluded to a moment ago, and that's the structure of these funds. We mentioned a little bit about JEPI using equity-linked notes for its covered call coverage. For anybody who doesn't know what those are essentially an investment in the index with the covered call strategy all wrapped up into a single security. So it's unlike the Global X funds, which are buying the stocks outright and then writing the options separately over the portfolio. They're a little less intuitive than some of the traditional strategies out there. They're more bond-like in nature because they are issued by financial institutions. So if the issuer happens to go under, the notes themselves are likely to go under as well. They're relatively thinly traded. They're mostly illiquid. They're not really intuitive to understand. Like Tom said, I don't think the counterparty risk is a big deal. And as far as what the shareholder sees, the covered call strategy is going to look effectively the same. So shareholders likely won't be burdened by that, but they're a little more complicated than XYLG and QYLG. So on structure and simplicity, I think I'll give it a split decision between the two Global X funds.
And now we move to the part of the show where our judges can give us their overall battle winner. So David, sum it up for us.
Yeah, I think JEPI's the winner here. I really like the actively managed strategy of the fund. I think it makes sense. The yield is obviously very attractive to anybody who's looking to add income to their portfolio. It's got some better diversification than the other two funds. One of the objectives of it is to try to achieve S&P 500-like returns with lower volatility, which it has accomplished over its short history. So I just think there's a lot to like here with JEPI. I'll go with that as the winner.
Tom, your final opportunity to weigh in with your overall battle winner. Give it to us.
Yeah, sure. Well, we're going to end on an agreement because I think JEPI, for a lot of the same points, you're getting a lot for 35 basis points. And the environment that we've been in has been very conducive. Value, low vol, all things that have been working, people wanting income. You are getting a lot in that strategy. And people notice that. That's why it's got $8 billion in it. And they all sort of launched around the same time. So and I like that there was no capital gain distribution as well. So my overall pick will go to the JPMorgan fund, JEPI.
Well, our judges have spoken, and according to my battle scorecard, today's winner is JEPI, and it was almost a clean sweep. I guess the dissenter was David. For his mystery battle category, he chose QYLG and XYLG as a split decision. But other than that, our judges pretty much agreed that JEPI was the winner in multiple categories, from cost, from exposure strategy, performance, and yield. Some great points made. As our judges said, actively managed fund for 35 basis points, that's a pretty good deal. And then also, JEPI has an ESG screen. For those of you into ESG investing, environmental, social governance, that's becoming more of a bigger deal. JEPI has also a higher yield. And then how about this point? There's no cap on yield like you have with those two Global X funds. So that was another great point. And then, of course, the tax efficient point mentioned by Tom, I thought was a good one, with JEPI having the advantage there. So if you're going to own these types of ETFs in a taxable investment account, that's a big consideration. You want to have some relative tax efficiency because overall, when you're selling covered calls, it can end up not being a very tax efficient strategy. But overall, again, judges, fantastic job in breaking this battle down, and keep up the good work. And we appreciate your timely analysis.
Thanks so much. This was great.
Thanks. Good to talk with you, Ron.
So what did you think about today's episode? Which of our judges do you agree with? Let us know in the comment section below. Also, which ETF battles would you like to see in our next episode? Give us your ETF ticker symbols in the comments section below or on our Twitter feed at ETF Guide. If we choose your battle, you win your choice of a mug or a battle shirt. Thanks for watching. I'm Ron DeLegge. We'll see you next time.